Opportunities don't happen. You create them. Chris Grosser. Let's jump into these charts, my friends. We see this is one of those days where everything is up and the getting's good. Let's jump first into the S&P 500. Our directional probability remains decent. Our backtest accuracy is okay. We are still long. We are very bullish, have continued to be. Now again, we see where it looks like over these last 3 weeks things are hitting around the same point. We are moving a little bit higher. Could be digesting the prior gains, then getting ready to go up again, or could be topping out. Don't know. Still in. Look at the 2-day chart. First day of the latest 2-day candle. It is a red doji right there. Decent volume. Means it opened lower than the prior close. We're about halfway there, maybe a little more toward average. And again, you can see red candles here. Now, these are Heikin Ashi candlesticks. If you don't know what Heikin Ashi candlesticks are all about, I'm going to put a link to our Heikin Ashi training at the end of the video today so you can have it. Great training. If you don't have my book, 3-Wave Trading Advantage, you need it. Become a Patreon member at any of the 3 levels of support and you will receive it. Now, let's talk about where we are. Look at all the volume here in the morning and then not quite average volume in the afternoon. So we're keeping an eye on the S&P. Remember, we're in the summertime trading zone. Things are a little lackadaisical. Not a lot of direction. When we hit the fall winter, which way is it going to go? Market going to go down or up? Remember, in the fall winter, more volume, more stuff happening, tend to be longer trends. And that trend could be down. And of course, if it is, we're going to be writing it down on SH. What is that? That's the single inverse. It's been going down for many, many weeks. Single inverse of the S&P 500 managed by ProShares. There's several different inverse funds. Then there's the multiple inverses 2 times, 3 times. That's some crazy stuff. And the fees are high and these things rebalance every day and your losses can be magnified. That's why you want to practice it when you can, when this market starts moving down, because everything that goes up does come down, but we're still long and it's cranking for us. We look at the NASDAQ, it is up less for the day, 0.10%. And of course, a green spinning top first day of the latest 2-day candle volumes. Okay, decent both in the morning and afternoon, staying above the weekly trend line on the half day, the 2-day, and the weekly. We are still long. Of course, all those directional probability percentages, the backtest accuracy, the entry point, the exit point, and the expected move, those are all on our trade execution summary grid, and that's sent out each and every day to our Patreon members, those who help underwrite the cost of putting this channel on to you. We release it to the general public at the Patreon page the day after. Let's look at where we are on 20-year U.S. government bonds. We are still short. That is, we are expecting them to continue down. They were not down for the day. They were just barely up 0.10%. But you can see what happened in the morning and what happened in the afternoon on the Heikin Ashi candlesticks. Now, as we continue to watch where things are going on these charts, we're laying down again another downtrend. And as we see it on the 2-day, and again, this is just the first 2-day candle. And again, we just continue to see things moving as they are moving in a downtrend. Not a super strong directional probability, but again, with the kind of setup here with the candles, with the interim high, with right at average volume that week before it was, and then moving over. Wasn't super excited about it, but as we finished up that first week and moved into the second, got me more excited. So again, that's where we are on the 20-year U.S. government bonds. Oh, and the inverse fund for that's TBF, something you could be practicing if you wanted to practice a short fund. What do we see with gold? Well, gold was up for the day 0.5%. It was our second highest mover, the first being Bitcoin. We'll get to that in a minute. But we can see, again, not much of a trend. I've tried to find a new trend going up. Hard to see there, though. But our directional probability has increased quite decently. And that just sort of a switch over today as we did all the math in charting, and our backtest accuracy is up nicely also with the patterns that we are seeing. So perhaps we're heading in the right direction again after 3 prior quite lackadaisical weeks on gold. You can see up in the morning, a lot of ranging up. Look at all that volume. That really helped a lot in changing our directional probability percentage and our backtest accuracy with prior patterns. Not up to average in the afternoon. Look at this on the 2-day already at average volume. We still have Thursday to go. And look at all the volume for this week. So again, all of that goes into the equations to change things for us. Lastly, we'll take a look at Bitcoin bounding up 2.43%. And again, we've got the NASDAQ 100 and HODL, the Bitcoin ETF, tied at second for the highest directional probability going up, but everything is beaten by gold. But as we look at Bitcoin, of course, we see a nice candle this week reaching a higher high, already to average volume. Look how close we are to average volume in just the first day of the latest 2-day candle. Not reaching that prior high yet, but moving in the right direction after that big slump that we saw take place Monday afternoon and Tuesday. So again, Bitcoin trying to rebound. That is where we are, my friends, as we end the day on Tuesday, go into Thursday, the 17th of July. We'll always love to hear from you. CW@chartingwealth.com. Thank you so much for being with us. God bless, my friends. All the best from the whole team at Charting Wealth.